Good morning, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is May 15th, 2024. This is the Kickstart video. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. Well, the data this morning, we had retail sales, we had US CPI data, we had New York Empire Fed manufacturing data. All of it came out on the weaker side. Now 0.3% for US CPI is still 0.3 times 12 is 3.6%. You need 0.1 and 0.2 numbers, but the market was relieved that things were not 0.4%, which would be worse, of course. We're seeing NASDAQ index up about 100 points. We're seeing the S&P index of about 26 points. Both of those indices are trading at new all-time highs, would be new all-time highs for those indices. We're seeing the 10-year yield down 8 basis points, and the 2-year yield also down about 8 basis points as well. So, which is helping to propel the U.S. dollar lower. When the U.S. dollar goes lower, the euro versus U.S. dollar goes higher. And looking at this 4-hour chart, finally, we're seeing a rotation and a move away from this 100-day moving average. This 100-day moving average comes in at 1.08234, and the price pretty much based on the last, which we have a new 4-hour bar reading started right now, but we're seeing the rotation to the upside as a result of the data this morning and away from that 100-day moving average. And this level is going to be the level that we have to stay above. In trading yesterday, the price came up toward that level, found willing sellers. In trading here today, we traded above and below the level before breaking to the upside. We're also moving above the 61.8% retracement of the move down from this high right here to this low right here. That 61 point comes in is 1.08354, and that's closer than the 100-day moving average as a risk-defining level. You always want to see that level remain broken. On the top side, the next key target comes against this swing area right through here, defined by a number of different swing lows and swing highs over time, including resistance right here and support right here before breaking to the downside. We return to that area right through here before moving to the downside, and we are moving back up toward that level. It would be the first time that we traded at that area since early April. 1.0875 to 1.0887 are the levels, the next key targets on the top side for the euro versus US dollar. Just taking a look at the hourly chart to see where we stand in respect to that. What we can see is that the 100 bar moving average on the 100-hour moving average held support in trading for yesterday on this spike to the downside, or this tumble to the downside before rotating back to the upside. And you can see the price action around the 100-day moving average here. Here we trade a little bit above it, and then we based against it before the number came out and forced the market to the upside. So here's the 61.8% retracement. Stay above that level is more bullish for the euro versus US dollar. Take a look at the dollar versus yen next, and we'll start by taking a look at the hourly chart here. We did see a try to the upside trading yesterday. Then things started to give up after we started to break back below this level right through here. What was that? The arrow turned to blue. Anyway, this level right here at the 156.28 level was broken in trading here today in the early European session, and that forced the price out to the downside. We broke below the 100-hour moving average, more bearish, and then the data came out and we broke below the 200-hour moving average into this swing area right through here, where we had a number of different swing highs through here, and then based against the level right through here before moving to the upside. And then we came back down toward this level on this whatever tumble was here. Admittedly, the price got a little wonky through here, but the last thing that we did was trade above that level through there, and we came back down toward this swing area right here. Also, the 38.2% retracement of 1.54962. We're currently trading above that level and also retesting the 200-hour moving average as we speak. So the buyers are trying to take some control. By the way, at 38.2, if I go to the 4-hour chart and take a look at this move to the upside from the low price that we saw in March, the high price, this was the 1990 high price. 38.2 comes in 154.96. I'd love for the price to move back below that level. Everyone knows that when you have a trend like move like we did here, that getting below the 38.2% retracement is sort of the minimum that you'd want to see happen. And we did, of course, on this intervention period through here, that took the price back down toward this key swing level right through here and found support buyers against that level. But getting back below that 38.2% retracement after moving above it in trading last week again, is sort of key. Also, what we don't want to see with the dollar versus yen is move back above the 100 bar moving average on the 4-hour chart at 155.52. So, you know, down here, swing level 38.2. Up here, the 100-day moving average, 100 bar moving average on the 4-hour chart. Those are the key levels in the dollar versus yen in trading here today. We'll see how that pans out. Let's next look at the sterling versus US dollar, and this is on the 4-hour chart. And if we take a look at this pair, there once was a time where I drew this red box, and we outlined how the market stayed mostly within this red box. This is called the value area. Yes, we moved above it and below it at different points in time, but most of the price action was here, and this is over extended period of time. Each of these dashed lines represents a week of trading. Well, in trading here today, the price did move back above the back into that red box, and we also moved above the 50% retracement of this move to the downside. That 50% comes in at 1.25957, the low of that red box. So this is going to continue to be a key level right here around the 126 level. Also, a key level is the 100-day moving average of 1.26327. We broke back above that level in trading a few weeks ago. The price moved back into this red box, but it couldn't get above the 100-day moving average. So today, we're above the 100-day moving average, and that's close support for buyers looking for an opportunity to buy. If we move back below that level, we could head back toward the 50% retracement. So this is going to be a key barometer in trading here today for both buyers and sellers. Stay above 1.26327 is more bullish. Move below is more bearish. On the top side, getting above the 61.8% retracement is the next target to get to and through, and then we'll start to look toward. We'll be looking more toward the midpoint of this value area and look toward other different levels, including this swing area and maybe even the high of the value area up here through here. You never know. So there you have it, a technical look at 3 of the major currency pairs after weaker U.S. data. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.